Hello traders, it's Sunday, July 10th, and here is our summary of last week's major financial events. It's remarkable how quickly markets have returned to equilibrium after the shock they received little over a week ago when Britain said no to the European Union and some say to the idea of globalization. Equities have more or less returned to their previous levels, oil continues to waver, and the only exception is gold, which continues to ride the waves of uncertainty to new highs. In the US, the non-farm payrolls once again surprised everybody, this time making up for last month's laggard results with a 287K revision upwards, which is making up for May and a whole lot more. Unemployment rose a tad to 4.9, but it's still way above the full employment mark. Still, as the June FOMC meeting minutes reveal, it's going to take a lot more than some positive data to convince the Fed of raising interest rates, with excuses to be found both locally and globally. As the week ended, we saw consumer credit rising from $13 to $18 billion, double the expectations, services and non-manufacturing PMIs on the rise, but factory orders down and share indexes surging to near record highs. In Europe, a new cloud is gathering under the guise of Italian banking woes. Unless bondholders are prepared to suffer some of the bad loans that bewilder the sector, EU regulation forbid government bailouts. And since most Italian bank debt holders are retail investors, such a move would make the present administration dangerously unpopular. Meanwhile, UK real estate is beginning to suffer the consequences of having its safe haven status challenged. And there's a good chance that England will acquire its second female prime minister. And Bank of England indicated over the week that it would ease policy, allowing the pound to regain just a small fraction of its earlier losses at just under 1.3 to the dollar. On Friday, the government rejected a plea signed by more than 4 million petitioners to stage a second Brexit referendum. In Australia, Standard & Poor's downgraded the country's AAA rating outlook in the midst of a closely contested national election. This morning, Malcolm Turnbull announced his victory, but his Conservative Party expects very difficult coalition negotiations in the weeks ahead. Also, Japan yesterday went to the polls to vote on a parliamentary upper house upon which Prime Minister Abe relies so closely to implement his reform-aiming economic policies. The nation's foreign investments and reserves were up as the week ended, helping the Nikkei to regain some of the losses it suffered over the week as the second wave of Brexit concerns pumped up the yen. Across the Straits, Chinese inflation rose by an inevitable 19%, which is still the slowest pace since January and well below the government's 3% target. Crude oil ended the week with another swing in its merry-go-round of fluctuating prices, as the U.S. oil rig count indicates another 10-rig increase. Alongside last week's disappointing Energy Administration report, the latest swing could indicate a new downward trend. This coming week, look out for the US's Beige Book and the Bank of Canada's interest rate decision, both on Wednesday. On Thursday, Britain's central bank gets to work, and on Friday, we'll have China's GDP and US retail sales and inflation numbers. Other than that, we'll be seeing you over the week for our daily London and New York session reviews. Here's hoping for a profitable and enjoyable week.